Good afternoon, everyone, and welcome to the presentation of Ignitis Group 2021 full-year financial result presentation, as well as the strategic plan update. If you join us for the first time, let me introduce ourselves. I'm Aina Rifil-Grinkevičienė, Investor Relations Officer at Ignitis Group, and it's my pleasure to introduce you with our CEO, Darius Maikštėnas, as well as CFO, Jonas Rimavičius. Our management today will present you financial results for the last year, key business highlights, as well as outlook for the next year and 4-year targets. After our presentation, we will have Q&A session, so please do not hesitate to ask any questions you might have. And now, Darius Maikštėnas, please begin.
Good afternoon, all of you. Thank you for joining our annual result call. Some of you maybe noticed that we had, during the last month, some changes in the management board. I'm really humbled having opportunity to continue as CEO and the chairman of the management board, and also happy to say that we have Jonas Rimavičius joining us as a newly appointed CFO. Welcome on board.
Thank you, Darius.
We together today will lead through the presentation and will answer to your questions. To those of you who are not participating in our previous annual calls, just short introduction about our Ignitis Group. We are largest energy group in Baltics with 4 business lines: networks, green generation, flexible generation, and customers and solutions. 2 of those are our main core businesses. Those are networks, which are mainly dominant by electricity, and green generations. Those 2 segments are contributing to our annual group adjusted EBITDA close to 80%. As I said, we are largest and leading energy group in the region, operating currently in Baltic states, Finland and Poland. And it's also very important to mention that all our strategy and operations are aligned with fundamentals of ESG, and we are targeting net zero by 2050. With that, I'm turning further into main highlights for 2021. Those are main important information what has happened during this year. First of all, we had very strong financial performance. We achieved adjusted group EBITDA of 332.7 million euros, which is 35.3% year-on-year growth. We exceeded guidance which we are providing during the last call, the top of the range of this guidance by 7.3%. The main growth and exceeding these expectations was driven by very strong performance and the growth of green generation. We actually more than doubled EBITDA of green generation, and right now this segment, this business area amounts 1/3 of the total group adjusted EBITDA. Based on this strong performance, we are continuing with our dividend policy. So we are expecting to pay for 2021 dividends of €1.90 per share, which respectively gives a dividend yield of above 5.7%. As I already mentioned, the biggest growth and the biggest impact was in green generation. And in this green generation, we succeeded to improve our position and our portfolio, both in installed capacity. In installed capacity, we added 113 megawatts of installed capacity, and we added to the pipeline additions 460 megawatts. We had very great success and progress on our sustainability ratings. Both sustainability ratings, MSCI and Sustainalytics, were improved, and right now we are standing among the leaders, industry leaders globally on these ratings, and significantly outperforming utility average. Also important highlight is that we succeeded to validate our greenhouse gas emissions targets with SBTi. And according to this plan, we are planning to reduce our emissions by 2030 by 47%. And the last one, we have new elected members across the governing bodies. Those are new members of supervisory board and committees, and we have a new term management board with 2 new members in the management board as well. As I already mentioned, we exceeded our guidance of adjusted EBITDA by 7.3%. And the major impact to this growth was a very strong performance of the generation, which was driven by higher market prices and higher spreads between peak and off-peak market prices. That resulted better than expected results in both segments, green generation and flexible generation. On top of that, we had the temporary positive effect from stored natural gas inventory, which was partly offset by ineffective proxy hedges. Continuing on our green generation, as I said, it was a very strong development on this side. So in total, we improved our portfolio by 290 megawatts, and it consists of 2 parts. We added 113 megawatts in operational assets. Those are Vilnius HP waste-to-energy unit and Polish Pomerania wind farm. On top of that, we added 460 megawatts under development stage. First of all, in the advanced stage, we added Polish solar portfolio 2, and also we added Silesia wind farm in Poland. Under the early stage, also we secured an early stage project in Latvia, and we started our greenfield portfolio development and secured land plots in Lithuania and Poland for development of onshore solar and wind generation. On the contrary, we decided to exit and terminate a conditional agreement with the Polish developer for Polish solar portfolio 1. That decision was due to the fact that this portfolio didn't succeed to acquire CFD support from the auctions, and our negotiations with the development did not result in the necessary return rate for us according our target returns. So we decided to exit from this portfolio, and this clearly illustrates our very strong investment discipline while we are targeting projects and implementing projects only if we are meeting our target returns, which are stated in our policies and strategies. If to look at the total current pipeline of the projects, you can see that all projects are under the schedule and budget, except only one, which is Vilnius HP biomass unit. We have some delays of COD in this project. Initially, COD was planned to be reached in fourth quarter 2022. And now we are rescheduling this project, and we are planning to reach COD 2 quarters later in the second quarter of 2023. Worth mentioning that this delay is caused by Rafako, main contractor of Vilnius biomass unit, which was entered into restructuring process, and we needed to rerun all public tendering procedures and restart the project. Nevertheless, we are planning to produce first heat from this biomass unit already this year. Turning into sustainability, as I said, we've got very strong ratings and strong improvements in MSCI ESG rating and Sustainalytics. MSCI was upgraded from A to AA, and Sustainalytics from previously 26.5 up to 20.4. So we are significantly outperforming industry average, and we are among the international leaders in the industry on this dimension. This year we had the first time answered CDP questionnaire and got evaluation of B. For us, it's a very good starting point with big potential to improve this rating also further on, while we are improving our climate policies. And also this year we validated our target emission targets with SBTi, and this is also very important moment to notice. As I already said, we had the renewal of supervisory board and the management board. Currently, we have most respected international diversified supervisory board in the industry in the region. We have 5 independent members with the independent chairman, containing very well-respected executive from the energy and renewable leading companies such as Siemens Gamesa, E.ON, Ørsted, and others. We have international, very well-recognized experts on the organizational development and sustainability. So really strong supervisory board, which is empowering our group further to executing our strategy. And we had a new term management board appointed. 3 out of 5 members are continuing from the previous term. And we have 2 members, Jonas Rimavičius and Mantas Mikalajūnas. They joined management board in this year. Both are working within the group for the quite long time, so we are ensuring very strong continuity of our strategy implementation further on. Now I will cover shortly main business segments, starting from networks. In networks, we had 5.6% growth of adjusted EBITDA, mainly to the year-on-year higher RAB. It was important event during this year that we had a methodology update for the electricity networks. In this update, regulator changed the model of calculating RAB from RAIC into more similar to historical cost model. On top of that, additional component of 28 million euros approximately annual component was implemented, and that component offset the changes which we got from the changing of methodology from RIC to historical cost. That led for us to ensure sustainable regulatory framework, that framework maintained for the future, and we have very clear and stable outlook for the future. Also, this year we significantly increased our investment level in networks, which reached 191 million euros, plus 35% year-on-year. Also, we experienced increased distributed volumes and slight deterioration of SAIFI indicator, mainly to extreme weather conditions. On the green generation, as I said, we had the strongest growth and performance in this segment. The growth of the segment is 113.3% year-on-year in adjusted EBITDA, so we more than doubled result of this segment, and right now it accounts 1/3 in the total portfolio. We added 113 megawatts of installed capacity, which immediately increased also electricity generated amount by close to the 20%. On the customers and solutions, we also have growth of adjusted EBITDA plus 32.1%, up to 40.6 million euros. That growth was driven by temporary positive natural gas effect, mainly to the average cost accounting method. Also, it included negative electricity business result due to the lower sales of ineffective proxy hedging. Everyone in this region and in Europe and worldwide experienced last year very extreme situation across commodity markets and electricity and natural gas markets, and very high volatility in prices caused quite significant, very big increase in our net working capital. So increase in net working capital is 463 million euros. That was due to the higher natural gas inventory value, temporary regulatory differences, increased derivatives trading margin calls, and advanced payments for natural gas. Another element, amortization of consumers of increasing electricity and natural gas prices, that will be reflected in 2022, and all these expenses will be returned to the group through DSO tariff over the period of 2023-2027, including cost of financing. On the flexible generation, there are no major news. Structure-wise, it was also growth of adjusted EBITDA, plus 26.9%. That was caused mainly to the higher clean spark spread in CCGT merchant activities. But very important to note that in this segment and this business area is focused to ancillary services, and just when market conditions allows, we have the possibilities to generate additional amount of electricity on the market. And 2021, that was extraordinary year that we had these positive conditions and we generated more. Even though we had record levels of generation, the load factor of units in Elektrėnai complex and flexible generation was less than 10%, which is illustrate that we have a huge fleet of reserve capacities which are needed for security of electricity system in the region, and main goal and main purpose for this business is to provide those system reserves, and on top of that, from time to time we have the upsell from the merchant. With that, I'm giving the floor to Jonas to talk about last year financials.
Thanks, Darius. Indeed, we had strong results in 2021 on the back of our business model, which combines resilient networks and green generation growth. But before going into detailed financials, I would like to first highlight a few changes in our financial reporting, which had an impact to both 2020 and 2021 numbers. So firstly, networks methodology update, which even though ensured sustainable regulatory model going forward, had a negative impact on our numbers for 2020 and 2021. Secondly, we have changed our accounting policy in relation to EU emission allowances. While previously we used to account them at fair value, we will now do that at cost in order to better reflect the results in profit and loss statement. And thirdly, we have reduced the number of management adjustments significantly and will now be doing only 3 instead of 8 adjustments. And we have done that in order to simplify the interpretation of our results and to align it closer with reported IFRS numbers. So now let's look at the financials. Our adjusted EBITDA has grown by 35% and reached 332.7 million euros, driven by green generation segment results, which have doubled last year and reached 107.5 million euros and now accounts for 1/3 of the total group's EBITDA. Green generation growth was driven mainly by the launch of new assets, namely Pomerania Wind Farm in Poland and Vilnius CHP Waste-to-Energy unit in Lithuania, as well as better performance of our operating assets, especially Kruonis Pump Storage Plant. Our other 3 segments have also demonstrated growth. However, while growth in the networks business is a sustainable one, we see that flexible generation and the customer and solutions better results are only temporary ones, especially on the customers and solutions side, where we had a positive effect coming from inventory and storage due to average cost accounting method being accounted in 2021, while the negative effect of hedging related to that inventory will fall in 2022. On the back of EBITDA growth, our other return metrics have increased as well. Adjusted return on capital employed reached 7.9%, up 2.5 percentage points compared to 2020. Adjusted net profit has increased to 163.1 million euros, up 70.8% year-over-year, and adjusted return on equity has also increased to 8.9%, plus 2.9 percentage points year-over-year. Investments, on the other hand, have declined by 32.3% to 234.9 million euros. Even though the networks investments have increased, driven by electricity network maintenance investments, the green generation has declined significantly. The decline in green generation is explained by the fact that 3 major projects were completed, so Pomerania Wind Farm, Kaunas CHP, and Vilnius CHP Waste-to-Energy unit, Therefore, there were limited investments in these projects in 2021, while on the other hand, our new pipeline projects have not yet reached a heavy investment phase and will reach that only in this year and next year. Turning to free cash flow figures, we have had a negative 300 million free cash flow in 2021, which was mainly driven by increase in net working capital of close to 400 million euros, which was mainly driven by electricity and gas market prices spikes, which in the end resulted in higher trade receivables, higher gas inventory, increase in accrued revenues related to temporary regulatory differences due to market prices exceeding the ones included in regulated supply tariffs. Net working capital has been the main driver behind the increase in our net debt figures, which have increased by 357 million euros up to 957.2 million. Even though net debt has increased, our leverage metrics have remained at healthy levels, with net debt to adjusted EBITDA at 2.9 times and FFO to net debt at 30.5%. As a reminder, our threshold for keeping BBB plus credit rating stands at over 23%. So there is quite a bit of headroom there. Turning to dividends, we intend to pay out 87.6 million euros in dividends, which for the year 2021, which represents 3% growth compared to last year and is fully in line with our dividend policy. This translates into dividends per share of 1.19 euros and a dividend yield of almost 6%. Based on a preliminary assessment and the currently adopted EU taxonomy criteria, we have calculated our sustainable shares of adjusted EBITDA, which stood at 63.7%, sustainable share of investments at 73.3%, sustainable share of revenue at 31.9%, and sustainable share of OPEX at 56.1%. As you may notice, revenue share is lower than other sustainable KPIs, which is due to the fact that electricity and gas supply activities are not treated as taxonomy eligible, and while it constitutes a small part of our business, it being a small margin business accounts for a larger share of revenues. And we plan to report on final taxonomy alignment in our annual report for 2022. Now let's move to the outlook for the next year. So we expect our adjusted EBITDA for 2022 to reach between 290 to 335 million euros. We expect growth in the network segment, where adjusted EBITDA level is known to a high degree due to already approved tariffs for 2022, and is based on RAB growth due to investments made and introduction of additional tariff component of 28 million euros. Our green generation segment is expected to increase as well, mainly because of full year result of Pomerania wind farm and implementation of asset rotation program. In the flexible generation segment, we expect a decline due to very favorable market conditions in the first half of 2021. And in the customers and solutions segment, we expect a significant decline because of the negative impact of skewed natural gas results between 2021 and 2022. And with this, I pass the word to Darius to summarize the results presentation.
Thank you, Jonas. So key takeaways are that our adjusted EBITDA increased by 35.3% year on year. It was mainly driven by green generation. Green generation EBITDA increased more than 2 times, up to 107.5 million, and now accounts 1/3 of our business. We exceeded the guidance for 2021 by 7.3%. We are in line with the dividend policy and expect to pay €1.19 per share, which is corresponding to 5.7-5.8% dividend yield. We are continuing expansion of green generation, and we added in this segment 113 megawatts in operational portfolio and increased our pipeline in the development phase by 460 megawatts. ESG ratings upgraded MSCI from A to AA, Sustainalytics from 26.5 to 20.4, placing us among the industry leaders and significantly above the utility average. And greenhouse gas emission reduction targets across all 3 scopes validated by SBTi. By 2030, we aim to cut our greenhouse gas emissions by 47% compared to the baseline of 2020. So therefore, we are providing adjusted EBITDA guidance for 2022 in the range between 220 and 335 million euros. Now I would like to turn and introduce you our strategic plan, main highlights of strategic plan. First of all, starting from the strategy part, at the core of our strategy is the ESG and the aim to target net zero emissions in the long run. And we are delivering this by ensuring resilience and flexibility of energy system and enabling energy transition and evolution across all 4 segments. The second biggest part of our strategic investments is growing renewables to meet regional energy needs. And also we are capturing growth opportunities while developing innovative solutions which are making life easier for our customers. During the strategic period of 2022-2025, we will invest 1.72 billion euros during this period. Half of it, about half of it, is dedicated to green generation, which will those investments will result that we will reach green generation operational capacity in 2025 from 2 to 2.2 gigawatts in total. So we will have the growth of the capacity up to 81%. About 45% of total investment is also dedicated to networks, which is naturally will grow a regulated asset base, and that growth will be from 27 to 35%. About 90% of all those investments are aligned with EU taxonomy, and between 85 and 95% are SDG related. With that, I'm giving the floor back to Jonas to talk more deeply about different business areas and our investments.
Yeah, so as Darius mentioned, for 2025, we target to reach between 2 and 2.2 gigawatts of installed green generation capacity, while our long-term target for 2030 remains unchanged at 4 gigawatts. Both these numbers are presented on the gross basis prior to the asset rotation result. Our current installed capacity stands at 1.2 gigawatts. And on our way to 2025 targets, we have already secured around 0.55 gigawatts of projects in various stages, under construction, under development advanced, and under development early stage, which leaves us with a residual target of 0.2 to 0.4 gigawatts, which we feel very comfortable with. Looking to the longer term, to the 4 gigawatt target by 2030, we have already projects under development of 0.86 gigawatts, which leaves us with a residual target of around 1 gigawatt between 2025 and 2030, which again, given the commitments in the region towards renewable energy development, is a very reasonable target. Looking into a bit more details in our pipeline, the total pipeline consists of 1.4 gigawatts of projects, which by technology are mainly dominated by offshore and onshore wind, but also we have some solar, hydro, and biomass in the mix as well. By geography, the dominant country is Lithuania, where we have 1.1 gigawatts of projects, while in Poland and Latvia, we have between 1 and 200 megawatts of projects. By stage, more than 130 megawatts are under construction. Another 240 megawatts are under advanced development, and the remaining 1 gigawatt is under development in the earlier stage. Moving on to our investment plans in the network segment, we plan to invest between 800 and 900 million euros over 2022-2025 period. And we will more than double that when looking at the 10-year horizon between 2021 and 2030 by investing around 1.9 billion euros in our networks. The aim of these investments is to enable the energy transition and ensure networks resilience. In terms of split between electricity and natural gas, absolute majority of 90% will be invested into electricity network, while the remaining 10% into natural gas network. In terms of maintenance and expansion capex split, it is roughly 50-50. The investment focus areas over the next 4 years by 2025 are as follows. Transition from overhead lines to underground cables, facilitating grid connections, empowering prosumers, decentralized generation and EV infrastructure, rollout of smart meters, and investments into predictive maintenance. We plan to halve our emissions by 2030, and these targets have been validated by Science Based Targets Initiative, or SBTi. Our 2025 target is a reduction of 23% versus baseline 2020 numbers. And also our near-term targets are aligned with 1.5 degree scenario alongside an explicit net zero commitment by 2050. Now moving on to the financials. We target to reach adjusted EBITDA in 2025 of between 370 and 410 million euros, which represents 11 to 23% growth compared to 2021 results, and is mainly driven by green generation growth. We also expect growth in the network segment, while flexible generation and customers and solutions are likely to decrease compared to 2021 numbers. Sustainable share of adjusted EBITDA is expected to increase above 70% in 2025 compared to the current level of 64% in 2021. Our adjusted return on capital employed targets remain unchanged, with the average between 5.5 and 6.5%. The lower level compared to 2021 numbers are explained by revised WACC in electricity DSO and better than usual results in 2021 for flexible generation and customers and solution segments. We also reiterate our commitment to a solid investment grade credit rating of BBB or above, and intend to maintain net debt to adjusted EBITDA level below 5 times. In terms of dividends, we also keep our previous commitments. We aim to grow our dividends to shareholders at a minimum of 3% annual rate. And of course, we have the flexibility to distribute excess cash if available. This translates into implied dividend yield between 2022 and 2025 of around 6 to 6.6% under the assumption of share price of 20.5 euros. And if we would apply that on the latest share price of the closing of the last Friday, we would get a dividend yield for 2025 of around 7%. And finally, 2025 strategic plan, in comparison to the previous strategic plan, has the same level of investments, has additional 200 megawatts of installed green generation capacity, and includes additional 20 million of adjusted EBITDA. And with this, I pass the word to Darius to conclude the presentation.
Thank you, Jonas. So main highlights are that adjusted EBITDA growth in this period we expecting to be in the range between 11 and 23%, and will reach the level between 370 and 410 million euros. That is driven by mainly green generation, new installed capacity, and also growth of RAB in networks. And we will continue to deliver on our promise and creating sustainable future by reducing greenhouse gas emissions minus 23% in 2025 versus 2020, and bringing forward net zero emissions. And we are committed to dividend growth, growing dividends by minimum 3% annually, which brings a solid dividend yield. Finally, we again reiterate that we have unique, very resilient business model, which shows its potential and resilience during all these turbulent times. And it combines attractive blend yield and green energy growth. We are leading utility and renewable energy group in the Baltic region, with the critical role for the region's decarbonization and energy security. We have resilient business with very highly visible cash flows from regulated and long-term contracted activities. Attractive growth is driven by green generation and distribution network investments. We have very strong disciplined financial profile, providing shareholder returns. And we have a very strong and experienced management team with the track record of building sustainable energy platform. With that, we are ready to answer to your questions.
So thank you, Darius and Jonas. Now, as mentioned, we will move on to Q&A session. So we will begin from the questions received in advance. But in case you would like to ask any more on the line, there is your instructions how to do that. Operator, handing over to you.
Thank you. We'll now begin the question and answer session. If you wish to ask a question over the audio, please press star and one on your telephone keypad and wait for your name to be announced. To cancel your request, please press the hash key. Alternatively, please use the question box available on your webcast page to submit your questions.
Thank you, Nadia. So, as mentioned, we received a few, I believe, most relevant questions nowadays. And the first one is, what's the wars in Ukraine impact on the group results?
Yeah, regarding Ukraine, currently we do not foresee any material impact to the group performance. However, we might see the volatility in markets resulting in additional working capital needs. So we are very well prepared for that.
Thank you, Darius. The next question is, how war in Ukraine may affect Lithuania's energy environment?
Definitely, Lithuanian energy system is very well interconnected and secured from any disturbances. And on top of that, we have very strong flexibility on the natural gas side, having ability to import additional LNG cargos via LNG terminal, and you'll also utilize natural gas storage in Latvia. So overall, energy system is very secured and very well protected in the region.
Our next question is, has Ignitis Group already terminated contracts with Gazprom and Interau Lietuva?
So our contract with Interau, we have terminated, I think, more than a year ago. With the pipeline, we are making a different approach. We started preparations not today or not yesterday, but more than a month ago. And our approach is to order additional LNG cargos and prioritize those. So in January, we did not use pipeline deliveries for Lithuanian markets at all. And first cargo, additional, not planned, not scheduled LNG cargo ship from United States arrived early February, and soon we will see more cargos in this region. So we will continue with our approach through the year as well.
Thank you, Darius. The next question is, how does Ignitis Group verify that electricity consumed by Kruonis PSHP is from renewable resources? Why it is part of green generation segment?
Yeah, so in terms of Kruonis pumped storage hydro plant, we do include it under green generation segment, and that is fully in line with EU taxonomy regulation. So we treat it as most of other participants in the market.
Thank you, Jonas. Our next question. Congrats on strong results. Could you please provide more flavor on asset rotation program in 2022 and afterwards? Thank you.
Yes, so in terms of asset rotation, as you know, we plan to sell up to 49% stakes in each individual green generation asset in order to both recycle capital for future growth and to increase our return levels. So we intend to plan this program in 2022, and afterwards we will be continuing to do that.
Currently, we have no further questions, but I really encourage you to do so. Operator, could you please remind us once again how people should ask questions on the line?
Thank you. Once again, if you wish to ask a question, please press star and one on your telephone keypad and wait for a name to be announced. Alternatively, please use the question box available on your webcast page to submit your questions. Dear speakers, there are no questions over the phones.
We have received one in written. Thank you. And it sounds like that. Could you please share what electricity price is assumed in strategic plan 2022-2025?
Yes. So in terms of electricity price assumptions, even though we do not disclose them publicly, but these are based on forward prices which we currently see in the market. So still at the relatively high level for the next couple of years, and then dropping down a bit towards the end of the strategic period horizon.
Thank you, Jonas. The next question is, what is your opinion about Brel and any impact which could arise from Belarus and Russia side?
Of course, this is more question to the system operator. From our knowledge, system is very well protected and went through different investments and the test of isolated regime, and we do not expect any possible disturbances on this side.
Thank you, Darius. We are waiting for more questions.
Dear participants, as a reminder, if you wish to ask a question over the phone, please press star and 1 on your telephone keypad. Alternatively, please use the question box available on your webcast page. Dear speakers, there are no questions over the phone. Please continue.
We received a few more questions. So the next is, could you please share any flavor on how much construction costs have risen for green generation assets?
Yeah. So in terms of capex increase for green generation, of course, in line with the whole market, we also have seen increases in prices there, in double-digit figures. However, it's important to note that we are not making any final investment decisions prior to securing contracts with the contractors, which means that despite the fact that capex has increased, it is included in our business cases in order to ensure high single to low double-digit level returns.
Thank you, Jonas. The next question is, thank you for the presentation. Could you tell more about Latvian regulatory framework for wind farm projects? Is it going to be easier to enter their market in the near future? Thanks.
Well, without going into too much details on the Latvian regulatory framework, we think that the Latvian market is a very attractive one, and we see that wind farm projects are getting traction there, and we will definitely be a part of that in the coming years.
Thank you, Jonas. Currently, there are no further questions, but let's wait for a few more minutes. We have one more question. What is your opinion about PPA in near future for wind parks? Could you please elaborate more on offshore wind project in Lithuania process?
Okay, so starting with the PPA. In the increasingly merchant environment for wind farm projects and solar projects, for that matter, the PPAs will be a critical part in any project going forward. And this is actually one of the key strengths that we have. We have a very sizable electricity supply portfolio, which is currently not covered by our generation. And the gap there is around 6 terawatt hours, which is enough to cover roughly 2 gigawatts of renewable capacities. And we are going to do that by utilizing these synergies between our supply business and customers and solutions and our green generation business.
Thank you, Jonas.
And on the offshore wind project in Lithuania, as you might know, the competitive tender for this project is scheduled, auctions are scheduled for 2023. And we as the group, we have a strategic partnership with Ocean Winds, aiming that project, and we actively preparing for that tender.
Thank you, Darius. As we have no further questions, let us conclude this presentation. So thank you everyone for joining. It's our pleasure as always to present you what we have achieved so far and our next milestones. So in case if you had any follow-up questions, please feel free to contact IR team. And now, again, thank you and stay safe.